Good evening, my fellow Riz Elite members. This is Take Two and Chris with Riz International. This is your weekly market recap, and we are joined again tonight by the man, the myth, the legend, the Riz. Riz, how you doing tonight, buddy?
Doing fantastic. Thanks for having me on.
Oh, no, it's always a pleasure. It's always great. And I know that everybody always comes with a lot of amazing questions for afterwards. So, guys, please make sure you save your questions for the end. No matter what it is you guys want to go over and talk about, we'll be more than happy to discuss it. But let's just go through our talk about the market here. And, kind of an interesting week. Obviously, we started off Monday here with this huge down candle. And we came right back down to the support level here at 34.25 on the S&P 500. And then after that, we didn't really do all that much. It was really a lot of these days, you see the wicks on these candles are just really pretty wicked. Get it? It really looks like we're just kind of channelized at this point between 35.50-ish and 34.25. And so, Riz, I wanted to get your thoughts on this. Do you think that we're going to be consolidating as we move into the elections and go through it? Is the market just kind of waiting to see what's going to happen?
Yes, Chris. Great sort of recap for the week. And absolutely, I concur with kind of what you just hinted at. I think I wasn't expecting it. I was hoping that we would get some direction. This isn't all that uncommon as markets wait it out. We know markets don't like uncertainty. So they do two things. One, they sell off. Okay. And that was exactly what happened Monday. The reason being stimulus.
Mm-hmm.
And I mentioned on our last webinar that, look, the stimulus is hanging over the head of markets, investors, everyone really, and even the average person, right? Because of course, what happens with the stimulus, how it's structured, how much is given, so on and so forth, will impact the individual along with small businesses and even, any corporations that they decide to provide any extra funding to, whether it's airlines, cruise lines, so on and so forth. So really a big kind of the best way I can describe it as a cloud hanging over on markets, and it's not raining, it's not dissipating the cloud, but it's just lingering. The cloud's lingering, it's not moving past either. So we're just kind of stuck in this sort of sideways action, and it's been a tricky week. Honestly, it's been a tricky week. Obviously, in Elite, we of course we provide insights, guidance. We have chats, we talk, and we do everything, but we want to also trade, right? And as traders, we want to trade, but guess what? That's not always the right thing. And those of you that are on here, either watching it live or watching it afterwards, we didn't trade all that much. And why is that? I'm not because I'm doing fuck all. Just in fact, I'm looking a bit too much, but I don't want to be looking and taking things and building narratives that are not there. This is crucial. You will have noticed, for those of you in Elite, that I'll provide guidance, I'll provide commentary on existing positions, on things that I hold, but then I may not end up doing anything in terms of taking new positions. Why? Because I have to check myself. I have to be careful. When you look at something long enough and you stare at it or you just monitor it, whatever it is that you do, the more you do it, the more you are able, or probably I would say kind of open to creating and seeing things that are just not there. You're going to see setups that are not there. You're going to see trades that are really not there, but you're taking them, and you're going to want to take them because you're just looking and looking. This is why I say have a life, have a career, have a job, all the things that are contrary to what these idiots on social media and Facebook ads and everywhere else say. They say to do this all day or just 2 hours a day and do only this. No, have a life, do something else. All right. I'm not going to get into tangent right now, but ultimately very choppy week. Chop kills accounts. Chop destroys traders. Okay. So there's a reason why I want to trade. We've had a lot of amazing new members over the last week and a half. I obviously want to see everyone do well, succeed. We're not going to be able to, take profits if we don't trade. So, when I'm not trading, there's a reason behind it. And I think, hopefully we get some direction this week. But think about it this way, guys. If last week is an indication, the stimulus news is not any closer. We haven't gotten any direction yet. And I'm not going to politicize it, but we don't have any direction yet. We don't have no conclusion yet. That's a fact. So What happens this week is a big, big question mark. Okay. And if anything we go by last week, we can assume, remember, we can assume that maybe this week could be similar. This is the last full trading week before the one of the largest, most important elections in the world. Period. Okay. Um, so think of it that way. I would not be surprised if markets kind of go sideways unless two things happen. We either get a stimulus bill passed, which will be very positive for markets, or if we don't get it passed and people and you know any of any of the parties say that, or the representatives say that, okay, you know what, this is off the table, we're not doing this until we get that clear, decisive verbiage. Well, markets are capable of moving sideways.
Yeah, I think you hit at a really important concept there in trading, is that sometimes the right trade is no trade. And I think as a trader in general, this is a very difficult thing to come to grips with, because like you said, we want to be trading, we want to be in the market, we want to be doing something. And I think sometimes the hardest thing is to just sit back and say, you know what, this is not how I trade, this is not my setup, this isn't something I want to take part in, because if I'm wrong, I'm going to get smashed.
Yeah, absolutely. And I always bring it back to square one, which is it doesn't matter if we're trading Apple, Facebook, Amazon, all solid, great companies that are not going anywhere. But it doesn't matter if it's any of these companies or some bottom of the barrel stock. Every time you place a trade, you buy something or you short something, you have capital at risk. Even if it's $1, you shall have capital at risk. So what do we do when we are uncertain, or we are even more uncertain than the regular uncertainty that's out there? Well, we just wait. We wait for the trades to come to us, and I've said that before, and it's worked out. Time and time again. We're all capable of over trading, me included. So, as someone who I hope, people kind of look to for guidance, hopefully, I have to be very, very careful not to overtrade and not to kind of take trades that just really not ideal, right? Does that mean every time we take a trade we're going to make money? No, but at least I know that I didn't force it. I didn't take a trade for the sake of trading and putting something out there, because that's what unfortunately the masses do. They have nothing to do, so they want to twiddle their thumbs and they click buy and sell buttons.
I can think of a lot of better buttons to press that wouldn't cost a lot of money doing that. But all right, let's keep going. Let's take a look here at the breakdown of the S&P 500. So the S&P 500 is still above water even after a long part of the year being in the negative. We've managed to push over the zero line, currently up 6.44%. 6.44% on the year, excuse me, with tech leading the way. Tech is just, the steamroller this year, up 26.82%. Everything else currently is underperforming the S&P 500. Healthcare is sitting right there with it at 5.57%, and utilities, for the first time since it looks like March, actually pushing over the zero line, currently at plus 1.47% on the year. Everything else still under the zero line. Real estate, financials, energies, all in the dumpster. Riz, do you think that this tech steamroller can just keep on going, or do you think we're going to see another pullback like we had back here in September? Or, what are your thoughts so far?
Yeah, I think we continue to move sideways. Again, election catalyst will be really big. Either big in a directional way or a big in a sigh of relief, right? So think of it this way: either we'll get like a blow off top, where think of it like a pressure cooker, right? Two things happen: either this thing whistles and it just goes crazy in either direction, or it just simmers out, right? The pressure is released, it simmers out. So we'll have one or two things, right? Last time around in 2016, we had a blow off top where the markets kind of tanked, overnight futures collected itself. Then a couple of days later, which is off to the races, right? I remember it like yesterday. So really keep that in context, guys. Really, I would say be patient. When you are able to control your trading, control your mind to the best extent of possible, you will realize not just trading, but just about everything gets easier in life, okay? And I don't know about you guys, but life is hard. Many things are in life are challenging. Why make it any more difficult than it has to be, right, for yourself and for others. So really, I think we're going to continue to see kind of what we're seeing now. I do think utilities have more upside. You can see they've been pushing up. Why have they been pushing up? We're getting to the last, we're in the last quarter, but we're getting the last couple months of 2020. We do know that many institutions, many funds have taken some risk off. This is why you're seeing that pullback from September in tech, right? Everyone's portfolios were in these institutions, hedge funds, pension funds, so on and so forth. They were very, very, very overweight tech. I'm not going to get into balancing portfolios in this, but really they had to take some positions off. They had to balance it out. So we saw tech go down. And then what happened? We saw a lot of money staying on the sidelines because as a result, we didn't see too much else move up, right? If you can take a look at the XRE, XLV, XLU, so on and so forth, they didn't move up. They just kind of moved sideways. So that means cash was on the sidelines. And we got that push back up in tech, but we're looking kind of a little bit bearish so far. It's not the end of the world. I don't see energy coming back up to like break even at all year to date anytime soon. It's going to linger here. Same with financials. So I genuinely feel, at least for the next week, things are going to move sideways.
Absolutely. That makes a lot of sense. Obviously, everybody is sitting in anticipation of the elections. All right, let's take a look at oil and gold here. Let's see what's going on. So oil continues to be channelized here, bouncing around between this 3670-ish area and about 44. Now, obviously, I'm sure that a lot of you have noticed that we have not been placing hardly any oil trades this year, and I'm sure you can probably see why. Yeah, Riz, do you think that this channel is going to get broken anytime soon, or are we going to have to wait for a coronavirus vaccine?
Yeah, so we obviously the vaccine is the number one medium to long-term catalyst inducing news. Okay, the election is the near term now. It was the long term one, but as months have gone by, it's now the near term. It's literally on the horizon. But beyond that, we obviously are just kind of in this doldrum of COVID coronavirus stuff. So the vaccine is that biggest catalyst. I am hearing that OPEC, from a development since our last webinar, that OPEC may be looking to continue the existing supply cuts. No conclusive confirmation yet, but that's the news. And if that happens, that's pretty good for oil to stabilize and kind of stay where it is. If they do the opposite of what they should be doing, in my view, if they're like, you know what, we're going to continue to ramp up production, then that will be bad news for oil. So really, I would think near-term catalyst is what OPEC decides for the near future.
All right, and so that's very insightful, and it's always good to keep an eye on OPEC when talking about oil and things like that. Let's move on to the shiny stuff. That would be gold. After this, monumental rise in gold, we've seen, a lot of chop, but it's mostly been in a downtrend. Now, obviously, gold is oftentimes considered by a lot of people as a hedge off against, whether it be, market uncertainty, inflation, things of that nature. But as the market continues to steamroll, towards the upside, honestly, for the last couple months, gold has really been declining. And so, Riz, what do you think about this? Did gold just get too high too fast, and we're starting to see the slow correction here, or is this again more of an anticipation thing, waiting for the election to say, okay, this is what we're going to do?
Yeah, I think a bit of both. It had gone up way too much, way too fast. Gold is not some penny stock that it needs to go parabolic. That's not how it moves. It shouldn't move like that. And we kind of got that parabolic move if you see mid-July. That's absurd. So I am not surprised in the least that it's back down to 1900. What I do know is that, it's floating there. It's floating there, and this bodes well because anytime you get a consolidation, this means, there's an equal amount of pressure on the buying and the selling side. So ultimately, this bodes well for the long-term price of gold. Where it ends up, no one knows, but we can get a brief glimmer into seeing that, okay, it hasn't come back down to the 1700 area. It hasn't come back down to where it was a year ago, 1500. So this is good. There is some buying pressure there. Okay. ultimately understand that we have to be very, very careful when trading oil and gold so far this year, because anytime we don't have much of a direction, you can two things can happen. Either you can nail it and get in at sort of the support or get out at resistance, or you're just going to be lingering and kind of get whipsawed, back and forth. So I always avoid trading things that are not really looking to have a solid formation up or downside forming. And I don't see that with gold yet. I wouldn't bet against gold. I wouldn't short gold because there's other trades you can take that are more akin to being shorted. And as a result, I would not be placing any trades with my money on gold or oil as of the time of this recording, because just the way things are. If something changes, then of course, what I said is now invalid. But for now, I think just moving sideways is not conducive to us taking it on the long or the short side.
That makes a lot of sense. I mean, when you don't have direction, it really doesn't help you decide on which type of position you want to take. And so, again, it's one of those things, understanding when the best time is to understand that the no trade is the best trade you can possibly make for your, your portfolio, for your brokerage account, and, potentially for, your future, financial security.
Yeah. Absolutely. I get it. People are like, oh, I'm an elite, it's cost me this much, blah, blah, blah. I paid for this, I paid for that. Well, time is a construct, just like markets. So if time is passing, it doesn't mean that any less occurrences of trade happening in the future. It just means time is passing. There is no shortage of trades or potential trades that will happen and be in front of you in the future. I assure you, if the markets open on next Monday, next Tuesday, whatever, after election, there will be potentials. We never need to trade thinking like this is a depleting commodity. Okay, it's not a natural resource where there's only so much left in the ground. Okay, there's gonna be thousands and thousands of trades out there. We just have to decide which one we want to take if it's suitable to us. Otherwise, we don't take them. We live another day. So very, very, very important, the mindset, discipline, and emotional side, because I get a lot of people who message me, I lost this much and that much. And usually it happens when markets are moving sideways. I've noticed that because people are doing things they shouldn't be doing. You know how they say the idle mind is the devil's workshop? Well, I think a similar axiom kind of applies to markets, where people are very, very, I would say, not used to sitting idle, not used to sitting and not doing anything. So what do? They get themselves in trouble because they're just waiting, right? So it's always best to do something else, get some fresh air, turn the computer off, or spend family time, or whatever it is that you do. Do something outside of markets, because you will want to trade when there isn't a trade. It's just a human nature. All of us are guilty of it. All of us are capable of making that mistake.
Absolutely. And, you kind of talk about, people maybe being upset that, we're not taking as many trades as they expected or something like that. Let me tell you guys, I've been in a lot of other rooms, and you're not going to get this type of information in other rooms. You're not going to have people telling you now is not the time not to trade. They're all going to be like, oh, we got to take this position or that position. And, let's go in with them some crazy size. And, oh, they're actually already out of the position when they alert it. And, you're just left holding the bag going, well, what happens now when the stock tanks 10%? And so, guys, I have to tell you that the amount that you pay for Elite to get this type of insight into, the trading mindset and how to be as effective a trader as possible is well worth the cost, because we're telling you what other people aren't going to say.
Yeah, and I appreciate that, Chris. I always say, in fact, is one of the first notifications when someone joins is we aren't here to force trades. We don't trade for the sake of it, and our job isn't there to, you know, shovel trades into someone's mouth. Our job is to make sure we do the best job possible in terms of managing risk, in terms of taking good trades. Are we going to lose money? Absolutely. Are we going to make some? I'm wagering on that too. But our job is to really teach people to operate in today's markets and not just buy or sell, because that's sure as hell gets more memberships or whatever, but I mean, I think it's obvious I don't give a fuck about that. Otherwise, I'd have thousands of members, and there's a reason why, we limit the people we let in and limit the people that can join, because I don't want a clusterfuck. I don't want people just pulling random tickers and commentary and spamming the chat. So, it's a conscious decision, and it goes against our values and our mission of being prudent, responsible, and genuine when it comes to trading. Yeah, precisely.
Sorry, I couldn't resist, guys. Riz always gives me these amazing opportunities for memes or things like that, and so I have to capitalize when the moment strikes. We did take one trade this week. It was my favorite ticker, Big C. Obviously, this one, hurting a little bit here. Got in on Big C at 95.73. And we're kind of looking for 99.50 on that. Well, we haven't gotten there quite yet, but we are not at stop loss at 89.50 either. Kind of looks like it might be basing out here. Riz, what are your thoughts on Big C? Obviously, this is a fairly new ticker as it had the IPO just a little bit, earlier in September.
Yeah. So can think of this, for those not familiar, think of the stock like, Wix or, WordPress isn't, I don't think it's public, but similar to that, like it's an online website company. So, similar to kind of Shopify, but in a different kind of demographic. So I really like this company. Of course, it's a growth stock. It's a new recent IPO. So those risks are all kind of there. But in terms of purely technicals, I think this looks good. The moment it starts breaking below 90 is, I think, when we're going to have a little bit of a harder time, because at that point, the floor will have given away. I've noticed that 90 is a really crucial point. I don't have an issue carrying this. I'm not going anywhere with it. If it gets to 75, 70, okay, I'm not too exposed. That's the beauty of having the correct position size for your account and for not only your account, but for your, mind. Because if you can't sleep easy at night, it doesn't matter how, what the stock is. You need to be able to sleep easy at night. You need to be able to have the correct position sizing for your account and for yourself. Okay, this is something that many people neglect. It's not just about the position size of the account. It's also what you're comfortable with, what you can sleep easy at night with, what you can not emotionally trade. Because sizing up is a very difficult thing for people in terms of position size and dollars values. So take smaller trades. And I've said that again and again. I feel like a broken recorder. I'm not too impacted when something goes south. Why? Because A, I know I believe in it. B, I have a longer time frame. C, I have the risk tolerance. And most importantly, I haven't overexposed myself, so that even if this goes against me and I do end up taking a loss, if big whoop, there'll be other ones where I make it back and then some. So people get into trouble with kind of overdoing what they're comfortable with, right? I may take a trade that's sort of maybe, let's say, 5% of my account size. Okay, it's a larger account. So let's say it might be 5% of the account size. But that doesn't mean someone else should take 5% of their account size. Maybe it's too much. They need to work to that point. And maybe their account size is only $10,000. It's all relative, but really, maybe they're not able to. Maybe they haven't able to kind of take that $500 trade yet. Or maybe, it's a $100,000 account, and now they're not able to put $5,000 in the stock like Big C. That's okay. You got to build up to it. That's not something anyone can do for you, right? So build up that sort of risk tolerance in terms of comfortability with position sizing, right? I apologize for going on a tangent, but I thought I would give some excess wisdom this webinar with things that are just outside of the sort of plus and minus and green and red and bull and bearish, right? So just something to kind of focus on in terms of mindset.
Absolutely, guys. And, risk tolerance and, understanding what you're comfortable and what you aren't with is really key as a trader for understanding who you are and how you should, size your positions. Because typically the next question that comes up after just a talk like that is like, well, what's my ideal position size? How much should I trade, Riz? And the answer is only you know that. Only you know what you're comfortable with. If you have, say, a $10,000 account and you're not comfortable putting, that $500 position size down, then go with 250. Do what is comfortable for you. That if you take, 5% on it, you're not gonna, lose sleep at night.
Yeah.
If something goes south, just, you'll be okay.
Yeah, yeah, and most of the stocks we trade, they're mostly large caps. They're mostly, big solid companies. So even if they go down, I mean, I shared a few examples over the last few months where something has gone against us and it's hit stop loss or whatever. I don't personally use hard stops on these swing trades. So if I continue to hold something because I believe in the trade and believe in a recovery, and what's happened, I've been patient, I've been holding, and guess what? It comes back, and either I break even or I maybe continue to carry or take some off and close it for a profit, right? I'm not saying put things into sort of bag holding mode, but it is really important that you assess the stock, the actual trade itself, and nothing's in a vacuum. Chris, I'm getting some feedback on your end. Not sure if
I
that's
was I was muted. My mic was muted, but I can turn it physically off when I'm not talking in the future. But yeah, guys, I think it's really important understanding what you're trading, why you're trading it, and how comfortable you are holding it. I want to give a specific example of that, and then we can get to Roberto's question here. Let me pull up Walmart. Let me dig back here. Gosh, when was that trade? I think it was back in 2019, maybe. I remember we took Walmart on a dip buy, and we just got like hammered on this thing, right? No, it was right here. It was this gap up where we capitalized on it. So I think we took it. Oh gosh, I think it was somewhere in this area here, and it just gapped down, and we got destroyed on it, right? And we were holding. We averaged down somewhere in here, holding. We averaged down again, and then we get this pop on earnings. Now, note we had to wait 2 earnings seasons to get there. But we got there because we believed in the trade. We believed in the company. We knew that Walmart wasn't going anywhere. And we made a really, really nice profit on this, guys. But if you had given up, after this dip buy here, you'd be sitting here kicking yourself because, you didn't truly believe in the trade at that point. I think that's why it's very important that you understand, not only the technicals of a trade, but what the company is, why it does it, and what its balance sheet looks like, which is basically fundamental analysis as well.
Yep. Yeah, good, great example. I'm glad you remember that. Actually, that's really nice. I probably there's so many trades that go through my brain. I can't even tell them apart sometimes. But yes, absolutely. You nailed it. This is just one example Chris is mentioning. There's been WDC more recently that was a big dud, and I closed for break even recently, right? I bought it around the consolidation area as it was looking to move up, but then it tanked because of earnings, and that kind of blew the lid off that trade. And waited a couple of months, 2-3 months, and here we are, broke even on those 2 or 3 solid green candles, and we're out, right? And it pulled back a little bit coming into this earnings, which I don't want to kind of carry into. So yes, guys, very, very important. And no single trade, no single situation is in a vacuum. Always do your best to assess what's happening. And according to you, you are you. A lot of people ask me every day, how much should I buy? How much should I sell? Should I put a stop loss? Should I take profit? Sure, there are great sort of guidelines and plans that you should kind of adhere to, and you don't break those plans. You don't just kind of go wishy-washy. You stick to the plan, but only you know if that plan is suitable to you, right? For WDC, me hanging on to it since it passed way below stop was okay with me. It wasn't precisely to my plan, of course, but it was still within the confines of being reasonable for me. So I held, right? And those that continued and maybe they got out, maybe they continue to hold, maybe this thing will continue to rally post earnings and they'll end up making a tidy sum, even though I got out, right? Why did I get out? It's okay. It's okay for my risk tolerance to exit and take that risk off leading into the election. For someone else, it can very much make sense to ride this because they like WDC. Maybe they like their hard drives or something, right? So very, very crucial to understand these concepts. I cannot believe that, no one touches on it, and that's fine. That's their loss because I touch on this. I talk about markets in a way that most people won't, and that differentiates me. So I'm not complaining, but I do wish more people had this kind of thinking and knowledge and understanding. But hey, if they come to me and learn from it, fantastic.
I think if Trump comes out and says, "Hey, we're going to throw in a Western Digital hard drive with every stimulus package. It's going to be a chicken in every pot and the hard drive in every home. Man, this thing's going to the moon. Let me tell you.
Absolutely, yeah. At that point, I'll probably end up trying getting in if I
Yeah,
can.
for sure, for sure. Okay, so Roberto wants us to look at Trill. I am not familiar. Oh, wow. Okay.
Yeah.
This one's been going a little bit nuts lately, pretty much all year since the start of 2020. So, okay. So he says, I think they got the goods and I made good with the stock, but the last 5 to 6 days she's bleeding. This looks like a correction to me. I think she's gone up a bit too high, too fast. But what are your thoughts, Riz?
Yeah, I concur. I mean, way overbought, way overdone. I guess this is like a biotech, something like that. I don't know the stock too well, but it seems like it's a biotech or something of that sort. And I'm not surprised if it has a monstrous rally like that. And usually they fade down, right? Think of it this way: the stock in early 2020 was about $1.50 or so. Okay, just put that into context. Okay, put that into context. It went up about 1,300%, as Chris has shown, and that's after the pullback, right? After already a pullback. Without the pullback, you could see from 2020 to the peak about what is that? I think 2,100% gain. Put things into perspective, okay? If you're bag holding this is not something I feel comfortable bag holding. This is not a Walmart. This is not a Microsoft. Okay, so only you know what you want to do with this because you took the trade. But this is not something I'm comfortable carrying below, the $12 mark. If it goes down, in fact, you know what? It could continue to bleed. It could continue to take out that floor, which is $12, and then go right down to 10, and so on and so forth. Okay, when you have a 2,000% gainer for the year, dropping 25%, 30%, 40% from that level isn't all that difficult to comprehend. Okay, and as Mike just kind of came in there with the perfect message saying double top, a classic double top. Okay, if you've taken the master class, for those of you that have taken it, that double top, that M. Okay, so absolutely nailed it. Again, not a big fan of this setup. I would be careful holding because, hey, look, this is a small company, it's a tiny company, and this stock was not even $1 not too long ago, right? Over a year. So keep that in mind.
Absolutely, guys. Keep an eye on those. We've had some crazy movers this year, so obviously keep everything in perspective. All right. Hey, Scott, glad you're here. And absolutely, we definitely enjoy doing this every weekend. It's a good time. I'm glad you're getting some use out of it. Can we take a look at Snap? I don't want to. While I'm in learning mode, it can get a little bit confusing at times. I bought several puts at its highest. Has this thing been overbought and overhyped? Well, I can tell you it's already overhyped. And is due for some kind of drop back to reality. It seems like something is off here. Would love to hear your thoughts on how this chart currently is performing. Well, let's take a look at this snappy piece of junk.
I'm not surprised Scott brought up Snap. We played the earnings on the wrong side, didn't get it right. It was a gamble, as all earnings trades are, and it kind of went up 30-something% the next day, and it just kind of moved up. So a couple things happening here. One, it's sort of a short squeeze candidate as well, and two, it's attracted every kid with $10 to their name. So it's mass hysteria. You're right. It is absolutely overbought. Just look at these RSI. Okay, look at this candle. It's parabolic the last 3 days. Does there have to be a pullback? No, we've seen companies like this stay overbought for months. Okay, we've seen companies like this hold their gains. So, does it have to drop back to earth? No. Do I hope? Yes. Does it have a higher potential now than it did last week to drop back to earth? Yes, because usually steam runs out, people start taking profits, and that will increase supply. And maybe people that are daring will now want to short this too. So with that said, our puts that we took last week, the trade's going against us, but it's still not, kaput yet. We still have this week till expiry. So with those puts, if we get a nice, 10-15% drop, those puts should do well in terms of, at least becoming profitable. So keep that in mind. I don't know exactly what contracts you took, but ultimately we do have a few days of time value in it, even though they're kind of in the dumpster for now. So let's see what happens tomorrow, right? I think a lot, like you said, can change. A lot can, um, just like you. I have the Friday expiry. I would keep this open. Let's see how it goes.
Yeah, guys, just want to remind everybody about the notifications on the options plays. Understand that you should not be taking the trade if you are not comfortable with losing the entire amount of the trade. That is something you have to be, at peace with when you're taking an options trade. So keep an eye on that. Keep an eye on, again, this is your risk tolerance. Are you okay with basically just taking that, that position and saying, okay, that's it. I'm
Yep.
putting it in. This is my wager, but if it goes against me, I'll live to see another day. If you can answer yes to that, then you can take the trade.
Yeah, yeah, good caveat there, Chris. Absolutely. That's why options trades are smaller in dollar amounts, right? They could be a few $100s, couple $100s, $100 even. Why? Because they're massively leveraged. So either they do really well or they go to zero, right? And that's the risk reward that makes sense so long as you take one contract or two contracts. You don't buy like 10, 20, 30 contracts unless you're dealing with hundreds of thousands of dollars in your account and you like to live on the edge. So absolutely something very key and crucial when we trade options. I'm okay if this thing goes to zero because I know I only risked as much as I'm okay with losing. But on the flip side, if Snap goes our way and tanks, oh boy, we stand to do really well. So that's the risk reward there for options trades when we buy a call or buy a put option.
Absolutely. All right. Anthony wants us to take a look at Yeti. People have been looking for one of those, but they've never found it. But sadly, it does have a ticker. Okay, let's see. Well, definitely look like we have some, overhead resistance here around 54-ish. Let's go ahead and stick that in there. Yeah. There we go. Kind of making a nice bounce off the 50 here, but this honestly just kind of looks like it's going a little bit sideways right now. Not all that much action going on here.
Yeah, absolutely. Like you said, kind of moving in this kind of wave, but ultimately, if I have to pick, if it breaks that 50 area, 49, 50 area, especially that 50 whole dollar mark, I think there's room down to go to about 44, 45. So that could be a great short setup. We just want to be aware that earnings are coming in November 9th or 4th, sorry. Sorry, 5th. So be very careful, cautious of that. I'm not sure which way you are leaning towards. You just mentioned the ticker, but for me, I would not buy this yet. I'd wait and see how things play out. If it can go to below 50, I'd maybe consider a short even. If it can hold and you want to play earnings, well, then that's just a 50-50. But setup right now is pointing more towards a short than an actual long.
All right, so Jacob says he only took a starter position in FSLY, so I don't mind holding this low, but 74.80 looks like the bottom for the last 2 months. If it drops below that area, are you thinking of getting out? Let me pull up the chart.
Yeah, great question, Jacob. So in the last webinar, Fastly came up as well. Not working out for us at all, but yes, you're right. Look at that sort of crucial support area, and the candle kind of looks up like a sort of a doji moving back up from the 75 area. And I said last week's webinar that 75 is kind of my area where I'm willing to just bite the bullet and just take it off, because again, this is not one of those blue chip companies. You don't want to just bag hold this, but as of now, I still hold. I'm giving it some wiggle room. I don't need to get out at 74, 80, or 50, like something specific like that. I don't have a hard stop, as I mentioned, on these. So I'm giving a little bit more wiggle room, maybe below 74, 75. I may just say, you know what, forget it. It's gone against me. So be it. And earnings are coming too. So a lot of kind of things that are coming to brew a perfect storm, so to speak, right? So earnings this week, we want to be very cautious of that. If it's a starter position, it's a small position, and you feel okay with it, absolutely let this thing ride. It's a large mover. We've seen it get hammered and then come back up. We don't need it to get back to 130. We just need it to get back to, about a $90 area and we'll do well. So guess what? We still have a little bit of a chance for this to work out. If not, if it's bothering someone, or if it's kind of weighing them down, or if they think, you know what, this is beyond my risk tolerance and this is now past a level that I was okay with holding, then stick to that rule. Stick to that rule, okay? And manage that trade. Very, very key. Remember, entering a trade is just the first part. The most crucial part is managing it. How you manage the trade will determine if you lose small or lose big, or if you win big or win small. That is up to you. Okay. Jack Hopkins says, could you take a look at Intel? Absolutely, yeah. Intel is something that got demolished. Again, horrible management. I love the company, especially more before. I think with this is not looking good for Intel as a company. Forget the stock price for a second. As a company, to me, it spells blatant mismanagement, blatant sort of, I would say, um, kind of negligence really in manufacturing some of their chipsets, and really the backlog and the absolute fuckery that they've pulled over the last couple of years. And as a result, AMD and NVIDIA eating their lunch, primarily AMD. So I hold this. I, in fact, added some after the earnings release where it dropped about 10, 11%. So I have added some more. The trade for me is currently in the red, but that's okay. I don't, Intel may not be in a sweetheart of a stock or a company. It may not be the best position in terms of its demographic, but I don't see it going under as a company. So that's something we need to be confident in. And if I have to hold it to 45, even 44, 42 area, I'm okay with that. It's not a worry. And I'm willing to give it time. Remember, time is a construct. You just have to see if you can utilize it to your benefit.
Absolutely, guys. Always have an understanding of what your time horizon is on your trades, and how you want to leverage that time to your advantage. Obviously, if you're looking at this and you got in pre-earnings, then you just got hammered if you took it long, and you're like, okay, well, I'm out. Your time horizon, on that trade was pretty short. But if you can expand that time horizon, give yourself a little bit more time for it to work, it can definitely, come back in your favor, as we've shown earlier. We got any other questions this evening? Anything you guys want us to take a look at, or stuff you want us to talk about?
See a couple more. Oh, there's one. Gage. Thoughts on FB. Facebook. Great company, no debt, amazing fundamentals, great growth. Of course, whether you like the platform or not, that doesn't really matter. But right now it's looking great. I would not be surprised if this thing rallies up to the high of 300. Earnings are coming. Of course, we know that's a big question mark. I won't even bother pretending to assume where and how those could go, but I am bullish on Facebook. I had a position that I took profit on, just to kind of decrease risk. And of course it's moved up beyond where I exited, and that's fine. These things happen, but I do like the company. I do like kind of its long-term growth prospects, and the fundamentals are fantastic. So this is one of those stocks that, that if you even buy and it goes against you and it's in the red, these are one of those stocks that, if you're okay with holding, unless something crazy happens, where Facebook gets banned in the US or something, you don't really have to worry too much. Okay. So I do like this company. As for how things go with earnings, it's your guess is as good as mine. Wyatt asks about PLTR, Plantier. This is something we've traded before. Very rarely do I trade IPOs, and we actually bought it. So I do like this company for long term. It's very new. The kind of, essentially think of it like a defense contractor for the government. It works in data and analytics. So I do like this company. I very much like it around the $9 level, even 920. Right now it's at 950. I like this stock for long term. Okay. So consider, if you have the ability to hold, or if you like it at this level, I can't fault you for getting long. I've been monitoring it last week. I've just been kind of waiting after Friday's candle to see if it get to around 920, 930 for an entry. Okay. Hope that answers your question, Wyatt. Jose asks, Starbucks, another good, solid company. Doesn't matter if it's a recession. Sure, people will buy less premium coffee like Starbucks and premium specialty drinks, but they will still buy it. I assure you, if someone's getting a stimulus check and that's the only thing to their name, I assure you all that money is not going to productive use. So people will buy coffee. And Starbucks stands to benefit from that, whether it's a recession, pandemic, or a booming economy. And you can see that it's continued to sort of move sideways with an upwards curve. And I like this for a long-term position. It can easily, in my view, get to previous highs, which are a little bit in range now. But I would not be surprised if this continues to move up. I think earnings should do well. Keep in mind, there's no guarantee. I don't have access to the CEO or the CFO or the data before. No one does. So again, that disclaimer must be said. But I do like this. I do like this for a long. Yeah, Chris putting up those pertinent images for us. Fantastic. All right, Jose, hopefully that gives you an idea. I would obviously not short or bet against Starbucks for the earnings personally. That's a very, very speculative position. But if I have to lean one way, it's a long.
Radu wants to know if we're going to offer an options trading masterclass anytime soon.
Absolutely. Great question. It's in development, actually. In fact, I was working on it last night. And it's, chugging along. I'm happy with the progress. Of course, knowing the way I am, I always like to put in more and more and more, and then redo it, and then put in more and more. So I'm doing the best I can to kind of temper that and find that nice balance between amazing value, amazing content, and always something that other people will never kind of give to you. So I have my own way of doing things, and people that have taken the stock trading masterclass know that. But yes, it is on the way. Long story short, it is on the way, and I'm hoping to actually release it soon. I know it's a running joke. People are like, 2025 maybe, but yeah, I assure you, I can guarantee, there's no guarantees in life, but I can almost guarantee it's going to be out next month. I can almost guarantee that. Okay. So, again, something to think about, and it will be very, very competitively, effectively priced. So amazing value. And what you will get for the price will be, frankly, a steal. So as always. So yes, absolutely. Thanks for asking that. Wyatt asked about Etsy, another company that we've traded before, not the best fundamentals, but definitely one of those growth stocks. I think it had a bad kind of day on, I think Wednesday with that drop. Am I buying it at these levels? Personally, no. I think it's a bit overdone. It's one of those growth stocks that's really overdone. It's done well because the pandemic is, of course, played into its hand. There's that earnings catalyst. I personally do not feel comfortable with the trade on this. Personally, okay, maybe you like the company or something, but personally for me, not the greatest technical setup. I don't really like fundamentals. Earnings results are spotty at best. There's not much consistency there. They do well, they do horrible, they do well, and so on and so forth. So really proceed with caution.
Definitely, guys. And, I just wanted to thank everybody for coming out tonight. We've been at it for almost an hour now. And I think this is a good spot to go ahead and call it a night. And so thank you, everybody, for coming out. I really appreciate all of the the participation tonight. Everybody here, it was awesome being able to interact with all you guys. And make sure all of you are going into the chat and telling everybody who didn't show up that they need to be live on webinar, because they get all of this amazing value, and you can interact with me and Riz live.
Yes. Thank you, Chris, for what you do. And thank you, everyone, for joining. A lot of you joined. I appreciate that. I love seeing the numbers, love seeing the community and content interactions and the ideas. Really, we do this. I assure you, we do this as a labor of love. It's a Sunday night for Chris. He has family. I have family. I have other commitments. And I know I'm not always on here, but Chris is doing this like, clockwork, always with consistency and passion. So, huge always a huge shout out and thanks to him, and of course thanks to you guys who we do it for you. I'm sure Chris will agree.
Absolutely, guys. We want to help everybody become a better trader and to be profitable and to achieve that financial independence that we are all striving for. So, as always, guys, just want to thank everybody for coming out. Thank you for all the participation, and we will see you in Discord on Monday. Good night,
Ciao.
everybody.